Welcome to the quarterly Emerging Market Podcast by Matthew Strauss. A quick look at 2021, and it is clear that emerging market assets faced a challenging period. In the fund itself, we went from a meaningful overweight in China to a meaningful underweight to adjust for these risks. In the stock selection side, there were some stellar calls in the consumer sectors, materials, utilities. But despite these positive developments, it was still a challenging period. And most of these challenges came from the macro side. And by far the most important development was that out of the US, where the US Federal Reserve pivoted from a dovish bias to a hawkish bias. Out of the biggest economy in the emerging markets, out of China, there was a number of developments that adversely affected equities. And here we think about tighter Chinese regulations, the trouble in the Chinese property sector, especially during the second half of the year, and then clear evidence of an economic slowdown in China, also more so in the second half of the year. On the political front, some negative developments out of Latin America and concerns about the Brazilian election in 2022. And then late in the year, the pandemic struck again, and this time in the form of the variant Omicron. And given that it's such a highly transmissible variant, it is problematic for a country like China with their zero tolerance policy towards the pandemic and any outbreak. So look, it's easy to see why investors move to the sideline and are staying on the sideline, as all these factors are still prevalent as we enter 2022. I do want to highlight three silver linings. These factors are well known and largely priced in. Positioning is light in emerging market equities. And lastly, valuation is really compelling compared to developed market equities. So these positive factors in and by themselves will not see a turnaround in emerging markets. But if we see some of these negative factors dissipating or even turning into positive factors, if we think maybe, for instance, the Chinese growth scenario, these three positive factors will really accelerate the return that we can expect from emerging markets. So over the next few months, the next month, 2, even 3 months, we do remain cautious on emerging markets, but our longer term view is still that of a constructive outlook for emerging markets. Thank you for listening to this podcast.